Welcome back, folks, to 3 at 3. 3 at 3, we break down for you unusual activity, give you a little bit of our special sauce, if you will. That unusual activity is calls that are being bought aggressively on the offer or puts that are being bought aggressively on the offer in big numbers. We don't care about 10 lots, 20 lots. We care about 500 lots, 1,000 lot, 2,000, that sort of thing. That's the stuff that gets our interest up, if you will. So with that said, let's dive right in and talk about Federal Reserve raising interest rates by a quarter of a point to the highest level since the great financial crisis. That's amid this current banking crisis. Now, I don't believe he had a choice. I know we all have choices, but I don't believe the Fed chairman, Jerome Powell, could, in the face of Europe hitting us with 50 bips last week, that was Ms. Lagarde at the ECB. I don't think he had a choice because virtually everything that's known now was known then. And she elected to move, and her colleagues elected to move 50 basis points to the upside. I don't think Jerome Powell, without overselling it, could say, you know what, we're going to cut. Really? So is the crisis worse than we thought? That's why I think he was backed into a corner. This is a problem of his own making. They waited way too long to start. They weren't critical enough of ludicrous programs that pumped up the economy too much and caused inflation to run at the highest pace in 40 years. They should have been critical of those policies. Instead, when they were asked, they were not. That's a big mistake. Nonetheless, we got to trade the market we have, not the one we want. And so in terms of this one, we've seen a very quick reversal from a pop to the upside to a drop to the downside. In fact, we were up over, I think, 200 points briefly for the Dow. We are down now by that same amount, 200 points. So to say that this is something that even though it was in line with what 80 some odd % of us thought was going to happen, is not being taken with, oh, it's a spoonful of sugar and it helps the medicine go down. Not at all. This is making things tougher on Joes and Janes in particular. And those Joes and Janes, I'm one of the Joes, that ends up taking down consumer confidence, takes down people's ability to buy new and used cars, to finance large purchases and credit card debt. And it's a relatively smaller percentage of Americans that have adjustable rate mortgages, but commercial properties, ouch. So moving rates up like this is not, although much anticipated, not a great thing in the short term. That's the short term. Longer term, this will be just fine. Here's another one that was just fine, and that was our Google trade from just a little bit ago. I love it when you do these one-day trades and all of a sudden, bang, it works out. We are taking profits fast, and you know the reason. The reason is when we're in the final 2 days of an expiration, and this one expires the 24th of March, you want to take your profits fast when you have them, and you need to take your losses quick when you have them as well. You can't just let it run against you. So just like yesterday when I was explaining about a trade that did not go our way, and I'm happy to share that with you. I'm never happy about it, but I'm happy to share. I cut my losses and move on to the next trade. I do not sit there and wring my hands and just watch it melt. I want to keep as much of that dry powder available, and it won't be available if I let it vaporize by riding a loser all the way into the ground. So when you have a loss, especially in the very short term options like the kind we were talking about here in Google, you've got to take that loss quickly. Now, we're not talking about losses today. We're talking about gains, because when they bought 1.2 million share equivalent of these calls, they were spot on and it worked out pretty well. Bang. That's what I'm talking about. All right, let's hit another. Pete and I are going to be at Vintners Resort in Santa Rosa, California, the 8th through the 10th of June. Now, there are only a few seats left, so please do not wait because by the time we hit April, I'll be surprised if we have any seats left. It's limited to 25 people, 2 days of live trading. Check it out at marketrebellion.com/Sonoma, SONOMA. Why should you attend? Because we're going to have a bunch of our coaches and mentors there. So if you need a little bit of that, it's included in your price of admission. Everybody will be able to experience not just 2 days of live trading, but also fabulous food at the restaurants in that area, fabulous tours of the vineyards and so forth. It is the 8th through the 10th of June. Make sure you check it out, marketrebellion.com/Sonoma. If you'd like to be with us and be one of 25 people, it's limited to just that, then join now. June 8th through the 10th, marketrebellion.com/Sonoma. All right, let's hit them. Going to hit them hard. Morgan Stanley. Pete talked about this earlier today. He jumped on it. The 24th of March expiring 90 calls. These calls already worked. And now since the market has flipped, let me see by how much we have flipped in the last few minutes. We're down 238 points for the Dow. We are down 24 points, 25 for the S&P, NASDAQ down 52. All of these are pretty big turns from where we were prior to this, folks. So right now, Morgan Stanley is 88.69. On the day, it had traded up to 90 after we cited this activity. It has now pulled back. So since this is 24th of March, 90 calls, I think you should either A, be patient, let it come down, and then buy an at the money call, or let this one pass because it only has 2 days to trade. So just be aware of that. Second trade, Love, Love. This is LoveSac, I guess. I guess they make furniture. Anyway, they're buying the April 20 puts with the stock at 23. So in other words, they expect a $3 drop out of the stock or something like that, maybe even a bigger drop. They bought 3,000 of these April 20 puts. They expire in a little over 3 weeks. Paid about $1 for them. So fairly big trade. Earnings are the 28th, which is next week. I forget, it's Tuesday or something. But anyway, I think we are going to see some consumers pulling back, both because of the cost to finance some of these things, as well as consumer confidence because of the recent banking activity. So keep an eye on them, folks. Make sure you don't just believe that everything's going to be off to the races to the upside, because that ain't the case just yet. Third and final is Sofi. So they stepped into Sofi today and bought 1 million share equivalent short at the $5 strike. Now, they only paid 8 cents for these. So that's $8 times 10,000. Call it an $80,000 trade that they put on. Okay, that's fairly big trade. Does it seem to you, because it kind of feels to me like this would be a trade that you would put on if you were protecting a 1 million share trade, rather than one that you're betting that it's going to fall by, some 20% of its value over the short term. It could fall by 20% of its value in the short term, but I think it's more or less somebody putting on some protective puts, because put can be insurance as well as a bearish bet. Bang. All right. That's going to do it for us, folks. Thank you for joining me. Thank you for joining me. Marketrebellion.com/get started for more. That's marketrebellion.com/get started for more. And I'll see you soon. Bang.